I know you're probably going to speak to that.
Yes, well on that is because when you take out a policy, they're going to send somebody out to inspect your building. And they're going to physical inspection, and they're going to look, and if you say like, they're going to come back and say, no, you're underinsured. They will tell you.
Right.
And then with property management, it's great when you're just getting into.
Hey everybody, thank you for tuning in today. This video is geared towards first-time real estate investors, and one of the biggest things that you really want to make sure that you consider is insurance. So I reached out to my friend Mark Fuchs. Mark, say hi to everybody.
Hello, everybody.
Mark is why don't you just tell them what you do?
I'm an insurance broker here in the Los Angeles area, and I've done business with Commercial Brokers International with some of their investment properties. And Joe reached out to me today to just talk to you about the coverages and the needs for commercial real estate insurance.
Well, honestly, you're probably the less boring person that I know. I figured you could make this a little bit more exciting than most. So,
okay.
Because this topic, as you know, can be a little bit of a daunting experience. So I really think, first and foremost, Mark, how much insurance do you believe, how much do you need, your coverage?
That's a good question. You have two different things you're looking at there. Your liability coverage, because obviously it's commercial.
Right.
Your typical policy comes with a 1 million, 2 million limits, which is 1 million per occurrence, 2 million per policy.
Okay.
Aggregate is the terminology. You can get higher limits of 2.2, or you can add an umbrella policy for even additional coverage if you feel the need.
Can you explain the umbrella policy?
Umbrella is just purely liability over and above your normal liability coverage on your existing policy.
Is that typically expensive?
No, umbrella insurance actually is really reasonable.
Okay.
Because it's purely just additional coverage if you happen to have some, enormous lawsuit that would exhaust your coverage of up to $2 million on your policy, then the umbrella would kick in.
Okay.
So that's how that works. And then on the amount of coverage, the biggest thing we see with a lot of people, especially people that have owned properties for a while, and I know this is a lot of newer property owners, is be realistic on what it's going to cost to rebuild your building. We like to start off with a base rate of about $200 a square foot. That's just frame building, nothing really fancy. Maybe it's a
basic.
Basic, not custom kitchens, not custom bathrooms. Make sure you have appropriate coverage, because if something were to happen and you have to rebuild. Right. I just saw a property where the person was insuring it for $135 a square foot. And
what was the replacement cost, do you think?
It was almost a 6,000 square foot building. So if you do the math, they should have had about $1.2 million in coverage.
Okay.
So to save probably a couple $100 a year on their insurance policy, they were underinsuring themselves by probably $300,000 to $400,000 in replacement cost.
Okay.
So that's a risk. That's a big thing to look at. And when you look at that, that also is maintenance is a big factor in your building.
Yeah, that's something that you folks, you really have to consider. Your maintenance is key, and even having professional property management. But I know you're probably going to speak to that.
Yes. Well, on that is because when you take out a policy, they're going to send somebody out to inspect your building. And they're going to physical inspection. And they're going to look, and if you say like, they're going to come back and say, no, you're underinsured. They will tell you.
Right.
And then with property management, it's great when you're just getting into investment properties to use a property manager, because one, they have schedules for maintenance. They have the access to the handyman, to whatever, the flooring, appliances.
Just the fact that your tenants will have access to you, the calls will be coming all over.
The tenants will be calling in, and the other nice thing about it is that a lot of companies will give you a premium discount for having a professional property manager, because they understand you have somebody there looking after the buildings.
Usually.
Yes, that's a good thing. And with kind of back to where we were talking about coverage with liability coverage, there's a thing out there, renter's insurance.
Right.
And I recommend to all the people that own apartment buildings is to require your tenants to have renter's insurance.
Yeah.
That way, if something happens, their friend falls in their unit it covers them first.
Does it still cover dog bites? It used to, I know. I don't know.
There's like 7 breeds that they won't cover.
Okay.
You know, it's like, you know, Akitas, Rottweilers, Pit Bulls, you know, like the ones that have had a history of
the ones you
attack.
especially don't want to get bit by.
Right. And the thing is that renter's policy gives you that first defensive layer.
Right.
Because liability, somebody gets hurt, it will cover them. If, God forbid, there's a fire, it will cover their personal property.
Okay.
And I always say to, like, you know, to anybody, tell me how much it would cost to replace your closet.
Right.
Just your clothes.
Oh, yeah.
Do you have professional wardrobe? Do you have suits? Do you have dresses?
Yeah.
Do you have gowns? Do you have a tuxedo?
Yeah.
Right. I mean, that's just
Because the
your
renter's
closet.
insurance is just a couple $100 a year, right?
Yeah, your
Typically.
base renter's policy, you can get, you know, 300,000 liability, probably 25,000 personal property,
Right.
250, 300 bucks a year, which, you know, is very inexpensive.
Yeah.
And that gives you that level of protection as well as the property owner.
Yeah.
And the thing is, it's your property.
Yeah. Yeah, it's good to require it. I mean, there's some states that it's mandatory, isn't it?
There's a few states that are
don't know how
mandatory.
you-
Most are not, because that's, you know, again, you can't
That'd be hard
force
to
them.
enforce.
Yeah, you can't enforce that. But again, it's your personal investment.
Right.
It's your
The
property.
more coverage, the better.
If you deem to rent a unit in my building, you have to have renter's insurance. That's
Right.
part of the lease.
Right.
You put it in there.
Yep.
You put the writing in there. And then, speaking of rents, there's another part. Big thing to look at is with accurate records is loss of income.
Yeah.
Okay.
That's
so
something, yeah.
what happens is your building. Again, let's use the fire scenario. There's some damage. There's, you know, you have to do repairs to your building. What the loss of income will do is it'll be just like you're renting out the building. You will be covered for 12 months. Sometimes
Maintains your revenue.
Maintains your revenue while you're in the renovation or reconstruction mode, should you have a covered loss.
Now, is that expensive?
No.
No?
That's a very inexpensive ad. It's a general question on most apartment policies. So just another layer of something that you want to be aware of.
Okay.
Ask your broker these questions. You know, it's really good to just, like, you know, just say, look, what do I need? Tell me. Ask the questions. You know, ask as many questions as possible. That's why you're going to somebody like myself or a property management company that works with somebody like myself.
Yeah.
They're gonna know, they're gonna have seen it, you know, like the farmer's commercial, you know? We know a thing or two because we've seen a thing or two.
Yeah.
You know, kind of like, you know, I don't know if we need to get approval from farmers for me to use that tagline, you know, but that's, you know, something that you want to look at. The thing about, you know, these videos is there's a lot of people watching these from all over the country.
Right.
There's different perils, is what we call loss, in different parts of the country.
Right.
So the first one I'm going to address is because we're here in Southern California, is earthquake coverage. Your normal building policy does not cover earthquake.
Yeah.
And if you're out here in the LA area, the Los Angeles Times today front page was, the headline was, "We're in an earthquake drought," which just...
Did at the bottom to say sponsored by your local...
Yeah, probably, sponsored by farmers, you know, probably. But
he's kidding, farmers.
I know, yes. But the thing is, you have to have a separate earthquake policy if you have any kind of damage. And then with earthquake policies, they're going to ask you if it's been retrofitted and things of that nature. And when you purchase a building, get every bit of information while you're closing, in the inspection. Because sometimes even in the inspection, they don't see it. Because a lot of this retrofitting, especially like if you have subterranean parking, that is almost an automatic no. They understand. That's a huge risk, and if you want to get coverage, you have to prove it's been retrofitted all the way down to the cement, you know, underneath there. Another thing that a lot of people unfortunately are dealing with, and right now back in the Midwest and in Joe's home state of Nebraska, is flood. And right now, if you ever watch the Weather Channel, they're talking about all these rivers are, you know, as the snow's starting to melt, they're going to crest even more. You already have the flooding. That's a separate policy as well, and is usually, it is always determined by a flood map. So when you're buying a property, find out the flood zones, because if you're in a flood zone that requires coverage or has the likelihood of flooding and storms or you know, just heavy rains, Your lender will require you.
We'll have a map that they look at. And we own a property. It's on a hill.
Right.
We have flood insurance.
Exactly. And that was because there's a creek.
Yeah.
A creek behind your property.
Creek right next door.
Probably has never flooded in its life.
No, it gets about 2 feet deep at max.
Right.
But yeah, we pay.
But it has the potential.
Right.
Yeah. And flood insurance has become very expensive. It used to be sponsored or subsidized by the government until they took tons of losses about a decade ago, and the head of FEMA came out and said,
well,
no.
you know that FEMA just announced where my family's at in Nebraska, they're not covering that county. And there was a lot of devastation there.
Yeah.
So FEMA said and it was multiple counties right in the area. There's not going to be any money.
Any FEMA money, right? And so that's a
don't count on that.
Don't count on that, And then another thing to look at is, speaking of flooding and water, is a lot of people think that water damage.
Yeah.
Oh, a pipe broke. I'm covered. Not necessarily. Again, back to the condition of your building, your maintenance.
Why you do the inspections when you're buying your first property.
Exactly. But the records, when you're buying a property or even after you've owned it, maintain very good records, because right on the front page of the application for this is, when was the wiring updated? When was the roof updated or replaced? When was the plumbing updated or replaced? So if you have a building...
Pipe that breaks that's
40
years old.
Yeah, 30 years old. They're going to say, no, that's wear and tear. That's not proper maintenance. So you could have a pipe break. Imagine having a pipe break on a second story of a building and flooding out and going to the downstairs, leaking into... You would have tens of thousands of dollars in damage and have no coverage.
Yeah.
So you must maintain, and if you haven't updated these things, they just won't write you.
Yeah.
Because the potential is
risk.
It's risk.
Too much risk.
It's risk. The underwriter's job is to minimize the risk for the insurance company, but don't think that they're trying to nitpick. Actually, the questions they're asking or the suggestions they make are really to protect you, the property owner.
Sure.
Because they will come out and do an inspection and you'll get a little report. And they'll have pictures of cracks in your sidewalk.
Yeah.
Your parking spaces aren't lined properly, or the paint's faded, or you have dumpsters too close to the back wall that could be a fire hazard. If you allow people to barbecue.
Yeah.
No over enclosed patios, balconies. Balconies are a big thing.
You hear that one a lot.
And also on balconies, if you have bars on your windows.
Quick release?
Has to have a quick release. If they do not have a quick release, no go.
Yeah.
They will make you put them in. It's not like, we'll give you 45 days.
Right.
No. They won't write it unless that is taken care of ahead of time.
Okay.
So with those kind of quick release, pools. If you have any kind of pools there, it must be fenced. Have all the information there. If it's a big complex, one of these.
Make sure you know the guidelines of how high, how far.
Pool, fencing. Because you have to have fence around it. And now what you're seeing is because, unfortunately, with today's society, a lot of people will sue first, ask questions later.
Right.
Is that the bars? You used to be able to get away with 6 inches in between, like the bars on hand railings, going upstairs. A lot of those now, companies are coming down to 4 inches. And
can you still, now on one property we had, we put a mesh over it.
That's what we suggest people do.
It was hideous looking.
Yeah.
But it solved the problem.
Solved the problem for them, because what it is, again, you don't want some young child sticking their head in there, getting stuck, or, anything, because any potential loss.
You just gotta, it's about limiting your liability.
Limiting your liability. And the thing is that I run into people and they're like, oh no, that's, they look at it and they're thinking like, I've got a building that's producing, just easy math number, $10,000 a month,
right.
$120,000 a year, free cash flow.
Yeah.
And they're like going, oh, I don't want to pay $2,500 for that policy, like keep it there in $2,200.
Yeah.
So for $300 a year, you're opening yourself up to tens of thousands of dollars in exposure. And one of those exposures that we kind of touched on before was the pipe breaking, sewer backup.
Yep.
Okay, a lot of people don't realize that if your drains back up from the sewer, that's not covered.
Right.
But they offer sewage and backup coverage, typically up to around $50,000. and it's less than $100.
Yeah, I got caught with that one on Thanksgiving Day. I actually was up in Mammoth skiing, so no cell reception. We have a management company, but we own it. We own the property. They were calling. They didn't get a whole first floor flooded. Didn't have the policy,
Right.
the insurance. That was expensive, because everybody's first floor. We needed all new flooring. Had to, the cleanup, and then
Right.
It's really something you want to have.
And then also
It was a toy that was stuck down in.
Yeah, it's something simple. Yeah, think about that.
Yeah.
A toy.
Yeah.
A toy.
Yeah,
Kid flushed down. And the
got
thing
in there,
is,
yep.
you have to remember, you're renting these places out. So you have people coming, in and out. The apartments. You have longer term people, but you don't know what their friend's going to do. They have their friend over with a new baby or a young kid.
It was a kid.
You don't know.
Yeah.
That
That was an expensive lesson for us.
That's an expensive lesson.
We have it now.
Oh, yes, you do. And then one of the things you kind of like brought up to me before, you're like, is it more expensive to use somebody like myself?
Yeah. What's the cost for having a broker like you out there?
It's really not. I mean, we get paid by the company.
Right.
There's no upfront commission or anything like that, and
So the cost is essentially the same.
the cost is the same.
And you do the shopping for everybody.
We do the shopping the same. Plus, we have companies that we work with.
Right.
We know the underwriters. We know
Right.
this. Like we can go in like certain companies. We can offer. We have the ability to just give like a 10% discount.
Oh, okay.
Like if we need to compete. And the thing is,
remember that.
like I don't. Yeah. I mean, the thing is that I'm not trying to throw the insurance companies under the
Sure,
bridge,
yeah.
but don't ever think they don't have wiggle room.
Sure.
Because trust me,
Little negotiation.
you got a little negotiation.
So a good broker can help you with
a
that.
good broker can help you with that because they'll come back and maybe whatever reason you haven't had a rate increase in 2 or 3 years, and then all of a sudden you get hit with a 30% increase.
Yeah.
It's kind of like, whoa, hey, time out.
Yeah.
Like this guy's been with us. He's had no
Yeah.
losses.
You can go to bat for him.
You can go to bat for him, and,
Okay.
and especially where you really can prove your worth.
Right.
Is really with the bigger buildings and the more expensive policies.
Right.
Because we've had some out there where premiums like it was like a 90 unit 12 building property,
Okay.
and the premium was upwards of $30,000.
Yeah.
They had a loss, then it kind of came up, we kind of went to bat for them. It's like, because they'll look at it as a business decision. We've collected 5 years of premiums at $30,000 a year. You had a loss of $30,000, whatever it was. Okay, they're going to do the math.
Now, some people think that if they get a claim, their rates are going to go up.
Not entirely true. It depends on the company.
Yeah.
Depends on your loss history.
Right.
Depends on maybe you might have multiple buildings
Yeah.
with them.
Yeah.
Don't think. I mean, it's pricing power.
Yeah.
And obviously, it also depends on the loss. If you have a loss because of poor maintenance, you're probably going to get non-renewed.
Right.
Because they're going to look at that. Because they're going to look at the potential.
Yeah, if you're
going
not
forward.
taking care of their risk,
Right. And
yours in their risk.
your risk. And the thing is, what a lot of people don't realize, you will be in better standing with an insurance company if you just say like have the bathtub overflowed and have the $20,000 loss, as opposed to the person that every year is filing a $3,000 claim.
Yeah.
Because they're going to be like, aggregate, it's not as much,
Right.
but what you've turned into is a constant problem.
Yeah.
And the thing is, it's only a matter of time before that $3,000 loss is a $50,000 loss, because
Sure.
obviously you're not maintaining and not paying attention to your building.
Okay.
So, a lot of these things are really just to help you have a more successful investment.
Right.
And insurance is a big part of it. Yes, it's a cost.
Cutting that check, it's kind of hard to believe that they're trying to help me out.
Yes.
'Cause sometimes
We're here for your benefit, Joe.
Yeah, exactly.
We truly are. Yeah.
All right, Mark. So can you kind of explain how the deductible works?
Yes. Okay, so deductibles, you have a choice. You can have a lower deductible, which will affect deductible is going to affect your premium. The smaller the deductible, obviously the higher the premium.
Right.
Typically, you can have 500, 1,000, 2,500, 5,000, upwards of 10,000.
Okay.
And a lot of times, the deductible is really a business decision of if you have a good cash flowing property, and do you want to have to make a claim for $1,000?
Oh,
No.
right. Yeah.
So what we try to do is we kind of encourage people that have quality buildings, good cash flow, to take the $2,500 deductible, because if you have a $1,000 deductible, you have a $1,500 loss. Are you going to file a claim for $500? No. It's not cost effective, because then you're going to have a claim and could eventually raise your premium. And the thing is, even with the higher deductible, you're saving a couple $100 in your premium anyway. Right. So, it's kind of, you do the math, like from 1,000 to 2,500, it's a difference in premium, different in outlay, but then again, it goes back to that properly maintaining your building.
Sure. Yeah.
The better your maintenance, the better your property manager is, the better you're on top of it, the less likelihood you are going to have a loss. So that's one thing to look at, there. And I know you were mentioning something to me, where you were saying something about your mother.
Oh, yeah. My act of God. I said, I know what my mother would think, but I think it might not be the same as what the insurance companies think.
Okay, so act of God. Okay, the best example I can say is, typically it's earthquakes, hurricanes,
right.
Things, so here in California, Southern California, earthquakes is a thing for us. In the Gulf states,
right.
Hurricanes.
So it has to do with the different levels.
So best example I can give you is last big earthquake we had, 1994.
Yep.
Every place else in the world registered it as over 7 point something. Caltech released a zip code thing that said it actually felt like an 8 point something in some places, and I happened to live in one of those zip codes. It was not fun. It was an e-ticket ride.
Yeah.
So, but what you had is, in an earthquake, anything like a 7.0 or higher, they could deem an act of God. Act of God means there's nothing you could have done. Insurance carriers could have been off the hook. So that's why it came out. It was a 6.9 and then revised to like a 6.7, then a 6.6. That was protectionism by the government, because if it was considered a 7.1,
FEMA,
they could have gotten out of some of those coverages as an act of God. Like, basically saying it doesn't matter if you retrofitted or you did all that, act of God. It's an act of God.
Yeah.
It's the apocalypse, know. And then like down in like the Gulf states, like the last, obviously Katrina.
Right.
Which was category 5. And, what happened with Katrina, that could have been deemed an act of God in some of those areas, but also with that, again, it goes back to knowing your coverage is, I had an uncle that lived down there, and the insurance company came in and said, here's your $15,000 because it was the water that washed your house away.
Right.
But they had to get a neighbor who actually rode out the storm and lived to give a sworn deposition that no, the wind had started to tear off the roofs and the integrity of the property was already compromised before the surge came in.
But he was a little bit crazy.
Yes.
If he stood there.
Yes.
I don't know if I would bank on that.
Me personally?
Yeah.
I would have sent him a very nice gift basket to say thank you for staying and giving me your deposition.
Thank you for having that in you.
But and that's another thing too. Catastrophic losses, it's so hard on the individual and the communities.
Yeah.
And one of the hardest things in there is dealing with your insurance company, because a lot of times it could take 6 months, a year, 2 years to even collect.
Process.
They'll have loss of use or loss of income things, something like that, to help you, get back on your feet or get,
to find you weren't covered.
Right, to find you weren't covered.
On one aspect of it.
And speaking of like different regions, there's a coverage out there called equipment breakdown, or a lot of people on the East Coast know it as boiler and machinery.
Sure. Texas, chillers.
Texas, right. Chillers, boilers. Well, here in Southern California, we don't have boilers.
Right.
So but a lot of companies now are putting that coverage in there on renewals.
Okay.
So again,
trying to sneak it in, you mean, or?
No, not need to sneak it in, but that's where, if you're working with an insurance professional, you're going to see that, because all of a sudden, if you get your renewal bill and it's 20-30% higher, you're like, oh my God, I didn't have a claim. Why did it go up? Well, that's where, your broker can come in and say, okay, well, they started adding equipment coverage.
Right.
You don't have to take it, but this is what it covers.
Right.
And explain it. And then again, all back to the maintenance, properly maintaining, older buildings.
Take care of your property, or make sure your property management takes care of your property. Even if you have a good property management, go out and walk your own property, inspect it. Don't Don't think that everything's happening perfectly. So
Well, because the insurance company is going to send an inspector out.
yeah, they're going to go out there anyway.
So if you don't understand your property, how are you going to question what they're telling you?
Right, exactly. But well, Mark, thank you for taking the time to come in today.
Thank you.
I'm going to put Mark's information so you can contact him directly. And always feel free to reach out if you have any other questions. You have an idea for a video you'd like to hear us do. Would love to hear your ideas. And please subscribe. But thank you for tuning in.
Thank you.